Hello everyone, welcome to Casual Investors Talks and welcome to our series on trading where we delve into the realities of the financial markets and uncover why most traders fail. Before I begin, the main question is, when did I start trading? I got into the game quite late during the COVID-19 pandemic. The global economic situation was bleak and I thought perhaps I should make my money work harder for me. MooMoo was the first platform I officially started on. Why MooMoo? I had fun while trading ever since I've started on the platform and recently was invited to join in on their exclusive. Why does retail investors on average loses money? There are many studies on this paradox on why retail trades positively, they predict returns but are not profitable. In this summary, you can see the study uses US retail trades data from 2010 to 2019. If you want to reference the whole study, the information is fixed at the side, but in conclusion, retail investors' tendency to focus on popular attention-grabbing stocks and their trading intensity led to systematic losses, despite their ability to predict short-term returns through order imbalances. So the question is, why does most traders fail then? So in this series, on why 95% of traders lose money and how to avoid their mistakes, we'll look at trading failures, lack of education and knowledge, emotional trading, poor risk management, over trading, lack of a trading plan, ignoring market conditions, lack of discipline and patience, and following the crowd. Especially for me, it's not my nature to plan for stop loss and profit taking. Many traders will be like me, maybe buying more, like dollar cost averaging. They do not plan for stop loss, which is setting a percentage, or to take profit by setting a percentage of return in order to reap the profits. Now, I'll rather plan with a long-term goal in mind. And how do you do that? You will need to first address the lack of education in trading to understand what are the strategies available and also to understand what is actually trading instead of just pure gambling, and also learn about technical analysis, doing your own due diligence on companies, on their valuations, and also understand global situations and how they may affect the industry or the company in question. Just to share, a long-term strategy that I took up early this year on Apple and for Tesla. Not to dive too deeply into it, this is just showing the Apple puts and Tesla puts that I sold early in the year, and right now at this moment it is gaining profit with a decent percentage. But do note, this is a strategy for options which is not really catered for everyone, but I would like to just share this because it's currently the strategy that I am embarking on. Selling put strategy is a bullish outlook strategy where you sell options for a long period. Some call them leaps for longer than 1 to 2 years. You are obligated to buy the underlying assets at the strike price if the option is exercised by the buyer before or at expiration. This strategy is typically used when you have a long-term bullish outlook on the underlying asset. I've highlighted some of the main points of selling this put option, but to summarize them, if you can have a read, is for the premium income. For me, it's the premium that I obtain at the start. What I want to do with this premium is, since I'm bullish, taking the premium now, I can put it into other investments like, to be conservative, I put it into cash plus, where it's also gaining interest over time and it's positive interest. While since I'm bullish about the stock, as long as the stock expires above the strike price, the entire premium will be mine to keep. And that's adding on the initial investment, such as cash plus, that I parked my money at the beginning. But as a disclaimer, selling put strategy is one of the highest in risk, is because in the event that you are required to purchase, you have to have the capital to buy all the stock that you have actually sold the option on. Typically, this strategy is for people who don't mind buying the stock now, but sold the put in the future in the event they need to buy back at a cheaper price. If not, they will gain the premium and also earn the profit. I hope this example to plan a strategy is one way where traders can profit from a bullish situation. But next up, I would like to highlight the impact of lack of education in trading. We will be discussing the importance of education in trading, the common misconceptions and myths, and the resources for gaining trading knowledge. So remember to like and subscribe, and I'll see you at the next episode. Thank you.